What's up, investors? Welcome to another Sunday special of the W.T.F report, bringing you the latest and greatest news that directly impact our financial markets and, more importantly, our portfolios. This week, we finally reached a deal. TikTok is going to have a new owner, kind of. We also have some really interesting remarks from the Federal Reserve this week, and to top it off, one of these big tech companies got hit with an antitrust lawsuit. So, without further ado, my name is Ayan with AQ Markets, and you're watching this week's WTF report. The overall market summary was red again, not as bad as last week, but still down. We had the Dow Jones down around 0.6%, the S&P 500 down around 1.6%, and then we had the Nasdaq down around 1.8%. And again, it is caused by a lot of these tech stocks having a little bit of a pullback. The same 20 stocks that I told you guys about that are causing the market to move, and the case evidence to show that it's just the tech stocks that are doing this is, look how down the Dow Jones is. It's only down 0.6% this week. That's because the Dow Jones is comprised mainly of industrial companies and consumer staples. So as you can see, they're not crashing. It's just these massive tech companies that are dragging down the S&P 500 and the Nasdaq. So don't worry, the markets are fine. So this week there was a lot of anticipation around the Federal Reserve's meetings and what their new future outlook is going to be for the coming years and what they were essentially thinking about the economy. And it started off pretty good because they announced that they're going to be keeping the federal interest rate at 0% upwards until 2023. I'm going to get into why that's important for the stock market, but let's finish up the Fed meetings first. So then things kind of took a turn for the worse when Jerome Powell ended up saying that at the end of the day, they are still very concerned about inflation and unemployment. And the reason that the interest rate is going to remain at 0% for a few years is because they're thinking that it's going to be very uncertain on how they're going to handle inflation and unemployment going into the future, given that the effects of this year are definitely going to permeate into 2021 and possibly 2022. Along with that, he really emphasized the fact that the government needs to create this new stimulus bill to help move things in the correct direction. So that was a little bit of a shot at Congress and the Senate. So hopefully they can get that passed and get some of this momentum going, and maybe we won't see the interest rate 0 until 2023, but that's a very heavy speculation. It is very fair to say, though, that the interest rate for 2021 and possibly the first half of 2022 will remain at 0%. So I'm going to get into why a 0% interest rate is generally a good thing for stocks. I'm going to boil it down to two reasons that hopefully make a lot of sense to the viewers. And the first reason being that generally when loans are created and when bonds are issued out, a lot of it is pegged to the federal interest rate. So if we had a high interest rate for the Fed being 3%, then people would be issuing bonds and issuing loans and mortgages somewhat above that in order to generate more of a return than what would just be safely issued at a bank. Now, when you have lower interest rates, that pulls the whole rates down, which means that money becomes cheaper. And what I mean by cheaper is that it is less expensive to borrow money. Would you rather borrow $100 at a 10% rate, or would you rather borrow $100 at a 3% rate? Obviously, you would take option 2. So with that being said, there's typically an economic expansion where many companies and many public companies are more willing to take in money from loans, assume the debt, and then cause expansion within their businesses. One thing to note, though, is that the stock market will react immediately when the rates are cut, but the economic effects will take place more than likely years to come. An example being, if a small business wants to take out a $200,000 loan, just assume they're a public company for now, and they're going to expand into multiple regions without the city, the stock market is going to price that in, saying that there is the potential that this company is going to expand and they could potentially quadruple their revenues in the next 2 years. Therefore, I'm going to increase my price target. Now, in actuality, nothing is done until the buildings are built, until the customers come in, and until the people hire the new people to help the overall economy. So that's one thing to note about how the stock market reacts to interest rates. The second factor that helps the overall stock market when it comes to interest rates is that, as I mentioned, the interest rates among all debt products will generally get pulled down. And what this means is that bond yields will be going down, meaning that they're not going to be issuing as much of a return that people would be interested in or willing to assume the risk. So this creates a little bit of an artificial demand for stocks, meaning that they rather be putting in the money for stocks in order to get a greater return. And you're going to see this especially with dividend yielding stocks, because if the federal interest rate is 0% and you can get a bond for 1%, but then you also have certain stocks that are high dividend yielding that are paying you 3 to 5%, which one would you pick? You would take the dividend stock, and along with that, you might see capital appreciation within the stock as well, so you get hit with a double positive there. And then the pragmatic part of the market, though, is no matter what, the stocks ultimately will be determined by earnings. So as I mentioned, the stock market will react immediately to the interest rates, but then we got to see, okay, 3 months from now when they release their quarterly earnings, did their earnings per share go up? Did their profitability go up? Did their revenues go up? Because at the end of the day, that's what people want to see. So keep that in mind. All right, so now let's talk about the deal of the year. I'm not going to call it century because it's not that big of a deal. There was just a lot of politics around it. So Oracle actually ended up winning the bid for TikTok, and they actually beat out Microsoft, given that Microsoft apparently was still a little concerned about some security details, and they wanted a little bit more security than they were offering. So they ended up losing the bid, and Oracle ended up taking it over. So initially, Oracle reacted very positively to this news, of course, but then reality set in where this deal still needs to get pushed through the government, the White House, the Treasury Department in order to get approved. So there actually were some amendments made the day after, and fortunately, the three parties actually agreed upon the amendments. But then there was still a little bit of uncertainty on what's going to happen, whether the security concerns are there, whether the Justice Department is getting exactly what they want when it comes to a partnership that involves the United States data. So it went under review, and then literally just last night, Trump ended up signing and approving the TikTok deal, meaning that Oracle is going to have a certain allocation of the ownership of TikTok, and they also have plans to possibly take it public next year. So tomorrow morning, we're more than likely going to see a very interesting movement within Oracle, so stay tuned for that. A lot of people were taking bets last week on whether the stocks are going to go up and down, and it really came down to the news. If you look at the chart, you can see it has these ups and downs last week, because depending on whatever news was coming out, the market was reacting accordingly. So this was a very volatile stock to watch this last week. Onwards to some stock-specific news. The Boeing 737 MAX plane might finally get FAA certification to fly again after being grounded in 2019 after the really catastrophic plane failures that cost the lives of many people around the world. So the stock initially reacted very positive to the news, and then it turns out that in their report they were saying that they're going to need to modify their existing planes that the companies have already purchased, and along with that they're going to have to add these changes to their manufacturing. So the stock kind of dipped down a little bit, ended up flat for the week, which isn't a big deal, but this is a really positive sign for Boeing going forward. Within the next 3 weeks is going to definitely be a very telltale sign of how the Boeing stock is going to do. A lot of their stock downfall this year has obviously been because of COVID-19, but a lot of it also carried over from last year when they had the 737 MAX issues. Last but not least, as I mentioned a month and a half ago, a lot of these big tech companies were facing some potential antitrust probes of how they conduct their business and how they handle certain aspects of the companies, and turns out that Facebook is more than likely going to get hit by the end of the year with an antitrust lawsuit, given their practices on how they stifle competition through acquisitions. So for example, if they see a nice up-and-coming company that they think could potentially disrupt them, they will buy them in their early stages for hundreds of millions or even $1 billion, but keep in mind that is absolutely pennies compared to what the company is worth, and in doing so they obtain their proprietary technology, and they will not have a competitor either take them or this small company come and take some of their market share. So they're going to be investigating that and potentially opening up a lawsuit. The likelihood of this happening is very 50-50. They're going to proceed with the filing of the paperwork, but whether it actually goes into fruition, we're more than likely going to find out in around December. That concludes this week's WTF report. I hope it shed some light on the new Oracle and TikTok deal, and I hope it also educated you a little bit more on how the Federal Reserve operates and how their policies and their actions dictate how the stock market does in the future. So if you really enjoyed this content, please make sure to like the video and subscribe to the channel so you get your weekly updates, and don't forget to share with all your friends and family. I'll see you guys next week. Thank you.